What's going on? Welcome back to the channel. So today we're going to talk to you about the top 5 short squeeze stocks that you need to add to your watch list going into this upcoming week. So I'm going to go over all the things that you need to know, but first make sure to hit that thumbs up. And with that, let's get right to it. So starting off with stock number 5, not in any particular order though, you have ticker FLWS, so 1-800-flowers.com, sitting at $3.19. Over the last 1 year, not doing that great, down 59.57%. And then over the last 1 month alone, largely piggybacking off of the broader market, it is down 25.81. One thing to take note of though is based on Seeking Alpha's quantitative data, it does have the valuation as A-. So potentially a little bit more of a value play of sorts. I'll leave this up here as well. So this is the seasonality. So with us being in November over the last 10 years, on average, it does go up about 5.4%, December 3%, January and February. So February seems to be a pretty good one. So again, something just to keep in mind. This is what they do. So other specialty retail, 3,900 employees, founded in 1976, but ultimately 84.07% of the free float is being shorted. Works out to be 9.68 million shares overall are being shorted. Cost to borrow average is 4.58%. That's an annual rate, not a daily rate. But DTC being 7.24 days, that does signal that the shorts are very, very overextended. DTC factors in the average volume for the stock in comparison to number of shares being shorted. Short score is 78.35, and so the higher the number, the higher the likelihood of a squeeze happening. So definitely very interesting stuff. Through IBKR, you see roughly around 2.4 million shares overall being shorted. So something again to keep in mind. So I think generally shorts are overextended with this stock, and with the market possibly gaining some good momentum this upcoming week, this one could see some very interesting price action and potentially a squeeze. So again, add this one to your watch list. Moving on to the next one, ticker is AVXL, sitting at 365. On Friday alone, it went down 35.94%. So I wanted to add this one on here only because potentially it could have been a very severe overreaction. And so ultimately, this is the reason why they did go down. So it looks like some EU rejection or potential rejection. Over the last 1 year, down 54.61%. And then over the last 1 month, down 56.61. So not doing too great, but seasonality, November does go up around 2%. December down 2%. January 3.8 down. February and March seems to be very good months historically for it. So over the last 10 years goes up 15.8% in February, and March 7.9%. And this is ultimately what they do. So biotech, 42 employees, founded in 2004, based out of good old NYC. 32.9% of the free float is being shorted. So all-time high short interest numbers, 27.34 million shares overall being shorted. Cost to borrow average is 156%. DTC, as I already mentioned, does kind of signal that shorts are very overextended. So 20.31 days. That is just insane stuff. Short score 92.74, and then through IBKR does indicate a measly 3,000 shares is available. So most likely you'll be seeing some buying from big institutions as they will buy just to lend out. So that could add some buying pressure. And as well, generally speaking, going back over here, the low on Friday did hit 286. So I think this one as well should just be added to a lot of individuals' kind of watch list just for a potential day trade as well. So let me know your thoughts on this one. Moving on to the next one, you have ticker is HIMS, so Him and Hers Health, sitting at 36.98. Over the last 1 year, it is up 77.36. Over the last 1 month, not doing that great, down 30.17%. And seasonality, November, it does go up about 28.6%. So today, or this year, it seems to be very abnormal. But December, January, and February all seems to be fairly positive and in the green. This is what they do on a side note. So healthcare services, just over about 1,600 employees, based out of good old San Fran. 35.86% of the free float is being shorted. 73.9 million shares overall being shorted. And that does work out to be $2.64 billion. And so all-time high short interest is roughly around 39%. So it is very close to that. DTC 2.62 days, so it does signal that shorts are rather overextended as well. Cost to borrow minimum is negative 0.31%, so that does mean that there is a broker or several brokers out there paying people to short this stock. So there's a lot of manipulation happening all around. Right now, about 2.9 million shares is available to be shorted. So this is stock number 3, although again, not in any particular order. Moving on to the next one, CYCU, sitting at 632. Friday alone went up 51.2% over the last 1 year. Still not doing that great, down 42.65%. And then over the last 1 month, up 2,500%. So this one definitely is hot like crazy, and I actually did post this as on this list roughly a couple of weeks ago, and yeah, things have worked out fairly well for it. So again, this is why you really need to add a lot of these stocks to your watch list. But nonetheless, this is what they do. So research and consulting services, 46 employees based out of good old the States. 24.14% of the free floats being shorted, works to be 438,000 shares. So this is exactly what the market does like to squeeze. Heavily shorted, low float. Cost to borrow average is 364%. Again, that's an annual rate, not a daily rate. And shorts have been extremely active ever since it looks like October the 23rd. That's where they started to really wake up. Short score 76.05, and then through IBKR does indicate a measly 200 shares. So most likely you'll be seeing some buying from big institutions this upcoming week. And then last but not least, you have Kohl's sitting at 1675 over the last 1 year, down 10%. It is gaining some pretty good traction over the last 1 month, up 7.86%. This is again a lot of good information right here. Based on the quantitative data, it does have the valuation as A. So again, a little bit more of a value play if that's again your thing. Based on the seasonality, November, December, January and February all does seem to be historically green over the last 10 years. So that does seem to be a pretty good consecutive month over month potential. And then this is what they do. I'm pretty sure generally everyone knows what they do, but Broadline Retail, 87,000 employees, founded in 1988. And 25.8% of the free float is being shorted. Works out to be 28.6 million shares overall being shorted. Cost to borrow average is kind of on the low end, so that's sitting at 0.79%. And short score is 66.39. Through IBKR though, it does indicate roughly around 750,000 shares is available to be shorted. And this stock actually does have some signs of potential naked shorting of sorts. So as I mentioned, roughly around 28 million shares is being shorted currently. Shares on loan though is 20.92. So there is more shares being shorted than on loan. So math doesn't really add up there. So again, you have some signs of naked shorting. Whether the SEC or someone does something, probably not. I wouldn't really be holding my breath for that. But still, if there is some good momentum this upcoming week, as well or over the next couple of weeks, you could be seeing shorts feel the need to kind of close out some of their positions. So again, something to keep in mind. So let me know your thoughts on these stocks. Is there any other squeeze plays that you feel could really move higher? Don't forget to hit that thumbs up. And then one final thing, if you are looking for some solid buy signals on stocks, options, crypto, pop over to my Patreon. I put out daily day trades, numerous swing trades, worthwhile to pop over there and check that out. With all that said, appreciate all of you watching.